every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder.
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits will help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
mean to a
means
layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
And so within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
everyone. Do you want to
everyone.
make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
So live from a stormy New York and New Jersey, fingers crossed, streaming on YouTube. It is Tuesday, August 4th, 2020. We're all just hoping the electricity just keeps on working here, Jason Kelly.
I am watching the trees sway and the lights flicker here in Westchester County, Carol. So hopefully it's a little better where you are, and
I'm giving you my storm, babe.
keep this whole thing together. Yeah, it's really been something watching this barrel its way up the East Coast, and obviously having the effect on a lot of our listeners and customers. Stay safe out there amid all of this, but we're powering through.
We are powering through. And amid all of this, we've got stocks kind of mixed, little change. I feel like we're waiting on more stimulus from Washington. We're waiting on that Friday jobs report. And I do also feel like, Jason, we're waiting on more optimism when it comes to the virus.
We are, and I think waiting on something to get done in Washington, too, to figure out the economic side of this big time. It is really, as you say, a waiting game all around.
All right, first up, let's get a check on today's trading session. For that, let's turn things over to Charlie Pellet. Hey, Charlie.
Well, hello there. Lots going on. Stormy day indeed. But let's begin with gold surging to a record $2,000 an ounce as investors continue to seek a haven amid growing economic and geopolitical risks. Right now, looking at gold, spot gold up 1.6%, now at $2,008. Gold, by the way, trading at a record. The 10-year up 12/30 seconds with a yield of 0.51%. Equities higher across the board. S&P has been fluctuating, but right now, 3,300 on the S&P, up 6. That's a gain of 0.2%. Dow Jones Industrial Average up 108, higher by 0.4%. NASDAQ up 21, a gain there of 0.2%. West Texas Intermediate crude oil pushing higher by 2.5% right now, 42.01 a barrel. Disney after the bell, Disney up by 1.1%. Also, we've got Fox reporting after the close. We'll be all over those numbers as they break. Recapping equities higher, gold at a record, S&P up 6, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, let's get right to setting the agenda, the Business Week agenda. For that, we have Bloomberg Global Macro Strategist Vincent.
All right, I think, as we mentioned, we were a little concerned that we might have some technical problems because of the storm, so hopefully we'll get Jason back real soon. Let's get, as Jason was setting up the Business Week agenda, Vince Signorella is Global Macro Strategist at Bloomberg News. He contributes to the Macro Squawk Desk, which is a real-time curated news that's audio streamed directly through your terminal. Check it out at Squawko on the Launchpad. And Dave Wilson, stocks editor at Bloomberg News. He's on the remote access from New Jersey. Vince, I got to start with you because I was listening to Charlie and I wrote down a quick note to myself. I got to ask the team about this one. Gold at a record, $2,000, I think $8 an ounce is what Charlie said specifically. What does that tell us about the market environment? That's typically seen as a safe haven.
Yeah, we're seeing some weird correlations going on today. You would not expect the stock market to be higher and gold setting at record highs. The two just don't, in the sense that, you know, one is a haven flow, one is a risk-on flow. We're seeing the dollar come off. That correlation still sitting with metals, lower dollar, higher metals. It feels like we're kind of tied to old algos in certain ways that really just aren't ringing true for now. You're seeing emerging market currencies do a little better pairing losses today. So the general mood is, as I think you had mentioned earlier, the hope that Washington will produce some stimulus. We saw a little pullback when Pelosi said, House Speaker Pelosi said, it's probably not going to get done this week. We kind of knew that, but just the idea that she poured a little cold water on it and actually set the markets off the highs. And the markets, as much as we want to get good news for the vaccine, we really want to hear the stimulus package, because unless the vaccine news, or rather the virus news is bad, we can deal with stable. What we really need is the economy to go on, stimulus to go on, and drive consumer spending. And without that, it's going to be tough to keep going.
No, that's a really good point. Hey, Dave, come on in on the trade, because we're definitely off our lows of the session, but little changed overall here. What's moving and impacting the trade here today?
Well, I mean, you can find some individual stories if you look hard enough. I mean, like the fertilizer maker Mosaic, the best performer on the day in the S&P 500. Take-Two Interactive Software, whose results were out late yesterday. Talk about a stay-at-home stock that's doing well. Those shares have set a record for the fourth straight day. And on the other side, you got companies like Ralph Lauren, whose numbers for their latest quarter didn't go over so well, and the shares are taking a hit because of that. So The thing is, though, I mean, at this point, when it comes to earnings, the trend has pretty well been established. You know, Jonathan Gold at Credit Suisse and others kind of noting that, you know, it doesn't look like the second quarter results are going to be anywhere near as bad as what analysts were anticipating. Our figures showing a 35% drop in profit. We went into earnings season anticipating 44% based on putting together analyst estimates for individual companies. And yet you're just not seeing as a whole much of a reaction to those results, you know, as you kind of go through company by company. I mean, there are some moves, like I mentioned earlier, but overall, it's not like you're getting the kind of response, say, to positive results that you might have gotten in previous quarters. And it's only because the bar was set so low going into this set of results.
Yeah, no, and you know, when you look at these results, Vince, you know, I'm going back to kind of what you and I were both talking about. You know, we're all just waiting to see what kind of relief comes through, because we've talked about this, that until we get through this, until everybody can safely or feel comfortably about kind of getting back to work, if you will, and things getting back to normal, we do need some kind of financial relief to maintain some sort of economy here in the United States.
Yeah, no, I totally agree. And I have to, I mean, realistically, you know, given it's an election year, I think there's some 30-odd seats in the Senate up, obviously the presidential election, and every seat in the House coming up. Right. It's really hard to believe that they won't come across the line with something really strong and really tangible before the end of next week. You know, you may see, well, we always see these little gaps, like the $600 extra unemployment insurance has lapsed, but in 1 to 2 weeks they could reinstate it and make it retroactive if they want to. So it's real easy to fix that problem, but they need to do it, I think, within the next 2 weeks. If they let it go past next Friday, the markets, I think, are very much going to lose any momentum they have and any hope that they have that this is going to be pulled off in time to properly set the stage for a better than expected, or at least a positive third quarter.
Yeah. How does the jobs report factor into any of your thinking here, Vince? I'm curious if people are already thinking about that. I know it's backwards-looking data. The Thursday data usually more relevant, but I'm just curious if that's popping up on the blog at all.
It pops up from a standpoint of continuing claims. That's the number that people don't want to see rise. You'll take a monthly variation from here, you know, from time to time, but you don't want to see.
I got one of those at home too.
Yeah, exactly. She's disagreeing with me on this one, I think. You don't want to see a major spike in continuing claims, whereas you think the economy's falling on a back foot again, where more and more people are re-entering that unemployment space, not able to find jobs. You'd like to see that number stable at worst, and if not, slowly improving. But you know, we'll see. You know, that's going to be the stage of the third quarter. If we get what people are hoping for, I'm not so sure that's going to happen. But I think they're a little optimistic for the third quarter. And as Dave mentioned, maybe too pessimistic for the second quarter.
Yeah, exactly. Hey, Vince, just quickly, got a tease for your chart of the day here?
Oh, that would be me, Carol. And
oh, Dave, I'm sorry.
It's okay. 6 companies bigger than 6 markets. That's the theme. You can probably figure out who the 6 companies are. The 6 markets, well, next hour. You'll know next hour.
All right, and I do know it's Dave Wilson. Sorry, I'm getting a little thrown off here with the power and so on and so forth.
Trust me, I'm just as thrown off as you. My power's been out for more than an hour.
I figured, because it sounded like you were on a phone line. All right, guys, thank you. Thank you so much. Dave's going to be back with us a little bit later on. Of course, Dave Wilson, our stocks editor at Bloomberg News, and Vince Signorello, our global macro strategist at Bloomberg News. Quick check on the Bloomberg Business Week bite of the day. One number that tells us a lot. Today's number, nice and big and round, $65 billion. Argentina's bonds jumped to the highest this year after it struck a deal with its top creditors to restructure $65 billion worth of debt. So an interesting and big number. All right, let's get to world and national news headlines. Lots going on. Let's check in with Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. Another meeting is taking place this afternoon between Democratic leaders and Treasury Secretary Steven Mnuchin and White House Chief of Staff Mark Meadows. They're working on a new coronavirus relief bill and trying to close the gaps between the two sides. White House Press Secretary Kayleigh McEnany.
Right now, we have Secretary Mnuchin and Chief of Staff Mark Meadows once again asking Nancy Pelosi and Chuck Schumer to come to the table. The ball is in their court here. We've made at least 4 offers. They've made 0 offers.
The negotiators are trying to reconcile differences between the $3.5 trillion Democratic plan passed by the House back in May and the $1 trillion package of aid that Senate Republicans introduced last week. Help is on the way for the nation's parks. Today, President Trump signed into law the Great American Outdoors Act that will put as much as $9.5 billion toward a backlog of park maintenance, including building and water upgrades, expanded parking, and revamped campgrounds.
This is a very big deal, and from an environmental standpoint and from just the beauty of our country standpoint, there hasn't been anything like this since Teddy Roosevelt, I suspect.
The new funding comes at a challenging time with attendance at the nation's parks down as much as 40% from last year, and many of the fees have been suspended. Red Cross officials say hundreds are being treated for injuries after explosions rocked Beirut today around the city's port. The afternoon blast shook several parts of the capital, and thick smoke billowed from the city center. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio. So checking out some of the stories that are catching our attention today, and TikTok continues to be one that we're talking about a lot. Of course, we mentioned it yesterday. Interesting to see whether or not Microsoft will ultimately be able to buy the U.S. operations of TikTok. And as you know, President Trump has been demanding a shutdown of TikTok in the United States. Well, there's a fascinating take on this story by Shelley Banjo and Sarah Fryer on the Bloomberg terminal. And, you know, fascinating because just last week we saw Facebook's CEO Mark Zuckerberg before Congress, right? And a lot of criticism of some of these big tech companies. Well, what's interesting is our story talks about how the Trump administration, while maybe tough on tech last week and members of Congress, today and this week, the Trump administration handing Facebook a bit of a gift. Because as we talked about the president planning to shut down Facebook's most formidable challenger, and we're talking about TikTok. Well, as a result of that, what we're seeing is that threat sparking a panic among users that it would be taken away. And so many popular TikTokers are racing to move their creative endeavors to Instagram, which is, of course, the rival mobile app that is owned by Facebook. Charlie Pellet, I know you're here and you're listening in. I don't use any of this stuff except for Twitter. But it's interesting to see how one company may lose and another company gains, especially when it comes to technology.
Absolutely right about that, Carol Master. I'm a big fan of Instagram, not on TikTok. My son's definitely on TikTok. Your daughter probably also keeping an eye on TikTok as well. I am watching the stock. Very interesting today. Despite the story, Facebook shares actually are moving lower. They are down now by 1.1%. Microsoft, the other key player in all of this, will they, won't they? Depends on Beijing, depends on Washington. Microsoft shares, they are moving lower. TikToking lower, you might say, down by 1.6%.
What's interesting, too, is I think some of the TikTokers are weighing in and saying, you know what, it's just not the same thing, right, Charlie? I mean, these are different apps.
Absolutely right about that. But definitely a story that we're watching. Again, Facebook shares, they are lower. Carol?
All right, Charlie Pellet, much appreciated. You're listening to Bloomberg Business Week on Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. Stocks are pushing higher. Gold at a record. Traders weighing the chances that lawmakers will move forward on a stimulus bill. S&P 500 index fluctuating between small gains and losses. Energy producers outperforming as crude climbs. Financial shares, though, suffering as American International Group, AIG, fell after last night's earnings report. Let's begin with AIG. Its shares are moving lower right now. AIG trading lower by roughly 7.1%. Among some of the other financial names, JP Morgan Chase down 0.9, Citigroup down by 0.7. The Dow, the S&P, NASDAQ all higher. S&P up 3, a gain of 0.1%. The Dow up 105, up 0.4. NASDAQ up 5, that's a gain of less than 0.1%. 10 years up 13.30 seconds with a yield of 0.51%. I mentioned gold, $2,008 the ounce, trading above $2,000. Spot gold up by 1.6%. And West Texas Intermediate crude up 2.1%, 41.89 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, Jason Kelly, I think his electricity went out a little bit, so he is joining more than 1 million homes and businesses that have lost power from North Carolina to New York as that tropical storm really comes up the east coast here. And so we've had some pretty nasty storms, I know, in my neighborhood just outside New York City. So that is certainly one of our most read stories on the Bloomberg today. Just want to give you a little bit of tease of what's to come on our broadcast. We'll get an update on the virus, but we're also going to talk a lot about education today. In fact, we're going to be doubling down. We have Emily Oster. She's the economics professor at Brown University. She's going to talk about micro schools and micropods when it comes to learning and what that means in terms of access and some of the inequalities that are out there when it comes to education. And it certainly has been something that we have been talking a lot about because of the pandemic specifically. Also, we're going to talk with the dean of the Fuqua School of Business at Duke University. They, I believe, are in phase 3 of their reopening. So we're going to talk a little bit about that process and how it's going, their expectations really for the upcoming school year and for the fall reopening. And then we've got the head of the Baldwin School. She is head of an all-girls school, and she's got a new book out. It's entitled What Girls Need, How to Raise Bold, Courageous, and Resilient Women. So we'll talk with her about that. That book is out today. And let's not forget, we have some big earnings coming out after the closing bell. I think Charlie mentioned them. Disney among them, so we'll break down their results specifically and see how they are managing through the crisis. And then we're also going to hear from Fox as well. So the media companies and the entertainment companies beginning to weigh in on earnings. So we'll hear from that after the closing bell. One of the other stories that caught my attention among the most read on the Bloomberg has to do with Jeffrey Gundlach over at Double Line Capital. And what's interesting is a lot of folks are watching very closely what's going on in the $20 trillion U.S. Treasury market, specifically looking at yields, 5-year U.S. debt yields. They grinded to another record low today, and that's just days after we saw a gauge of Treasury volatility fall to an all-time nadir. So we're seeing bond traders and investors taking a hard look at the speed of these declines and are on the lookout for any signs that a reckoning is underway. I do also want to bring in Doug Krisner, who is anchor of Daybreak Asia on Bloomberg Radio. He's going to hit the airwaves in a couple of hours, but he's joining me right now. I mean, I do feel like, Doug, that so many people and so many investors and market watchers are looking for any kind of clues about kind of where we go from here.
Absolutely, and particularly as it relates to stimulus on the fiscal side here in the United States. We know from our reporting in Washington that the Republicans and Democrats at this point seem to be far apart. Yesterday on the program, we were talking about President Trump's assertion that he could possibly use some kind of executive order to reinstate those unemployment benefits, at least on the federal level. That would be the $600 weekly supplemental. Not clear how he would do that. And a lot of the guests that we've been talking to on our show, Carol, indicate that the market at this point has discounted fiscal stimulus of about another $1.5 trillion. That's a little bit more than the Republican line at this point, a lot less than what the Democrats were hoping to achieve. So we'll have to see where we go from here. I mean, it's already the case where the federal subsidy on unemployment benefits has essentially expired. So how much more in terms of stimulus, a key question for markets. But look what's happening to long-term interest rates today. I mean, the 10-year Treasury is down another 4.5 basis points, 51 basis points now on the 10-year. So we're dealing with historically low interest rates. It was Neil Kashkari, I believe, over the weekend that was making the case that with these low rates, it would behoove the U.S. government to borrow more right now and to stimulate the economy further on the fiscal side more than Congress has already done. But at this point, we seem to be deadlocked, and I'm not clear that we're going to get a breakthrough anytime soon.
Which is kind of remarkable because we do know that the relief, the stimulus, the aid packages kind of need to keep coming to create some kind of economy here in the United States. And that's, I think, been the concern because the deeper the fall is in terms of the U.S. economy and just remembering those second quarter GDP numbers, Doug, I mean, it's hard to even kind of get your head around the dramatic drops that we've seen, but we understand why. But most folks have said that as long as we continue to get some kind of aid to help out individuals, help out small businesses, that will help big time for the recovery that comes after the virus and after we are really able to reopen.
And I think the next phase here is especially critical when it comes to local and state governments. This is something that the Democrats have pushed very hard for. Yesterday, when President Trump was giving his daily briefing on the coronavirus, he talked about the fact that, in his view, subsidy or aid for cities that have been poorly run would effectively be a bailout, and he didn't want to sign off on that. But the extent to which weakness in the tax revenue side has been negatively impacting the coffers of a lot of state governments, local governments, it's putting much, much more stress on those systems. Here in New York, I took the subway in to the office today. And the MTA here in New York City is incredibly stressed right now. The lack of ridership, lack of revenue is negatively impacting the entire budget. So they're already discussing the fact that their CapEx, their spending on upgrading infrastructure is going to have to change. And, this is just one example of, I think, what many municipalities across the country are going to be dealing with.
Yeah, exactly. And that has certainly been one of the crises, I think, that are concerns about the cities and states around the country kind of being the next crisis that everybody's going to have to deal with. Doug, thank you so much. Really appreciate
Always a pleasure, Carol.
you joining in. Doug Krisner, of course. Catch him on Daybreak Asia. That's coming up in about 3.5 hours. You're listening to Bloomberg Business Week. I'm Carol Masser. Coming up, we're going to get a deep dive into the latest on the coronavirus. We'll catch up with our own Michelle Cortez, who's been tracking it for us. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everyone. This is Bloomberg Business Week on this stormy Tuesday, at least stormy on the Northeast coast. I'm Carol Masser, working from home. Coming up, we're going to talk about the most read story on the Bloomberg in the past 60 minutes. It's a bit of a shocker. We're going to check in with our senior medical reporter at Bloomberg News for the details on that one. First up, let's get back to your top business stories and an update on the trading day. Here is Charlie Pellet.
Hi, thank you very much, Carol. We've got stocks just turning lower since our last update right now. The Dow giving up a lot of its gains. Let's begin with the Dow Jones Industrial Average. Still on the plus side, up 31 points right now, but fading fast, up by 0.1%. We've got the S&P now lower, down 4 points. That is a drop of 0.2%. Again, giving up earlier gains. NASDAQ is down 33. That is a drop of 0.3%. The 10-year up 13.30 seconds. The yield on the 10-year now 0.51%. Gold continues to push higher, up at $2,006 the ounce. That is right, holding above $2,000, a record there for gold, up 1.5%. Spot gold is higher. West Texas Intermediate crude up 1.6%. 41.65 for a barrel right now of West Texas Intermediate crude. Financial shares suffering as American International Group falls after earnings. It posted a $7.9 billion loss. AIG shares, they're down 7.4% among some of the financial names. JP Morgan Chase down 1%. Citigroup down 0.9%. Bank of America giving up earlier gains, down now by about 0.2%. So a down day for a lot of the financials. New York and New Jersey, the early hotspots of the coronavirus pandemic, getting tough on parties, anti-maskers, and out-of-town visitors that are raising the risk of a resurgence. Carla Friedman is executive director of the Johns Hopkins Foreign Policy Institute. She says China had early success with massive lockdowns and stringent requirements for face masks.
What has happened around the world is we've learned that even just wearing masks can significantly cut the rate of transmission. But it's very difficult to get people to do that in countries that have more freedom, and we've just seen people flouting these measures around the world in the West.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping here, equities are trading mixed. We have got the S&P 500 index down 5 now, a drop there of 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Yes, indeed. Charlie, thank you so much. Well, this story is the most read on the Bloomberg in the past 1 hour, and it talks about the CDC. It talks about a warning. It is not, though, specifically about the coronavirus. Let's get into the details. Bloomberg News senior medical reporter Michelle Cortez is back with us. She joins us on the phone from Minneapolis. I have to say, Michelle, I was like quick scanning, and I'm like, wait, what is this about?
Right, exactly. As if 2020 couldn't get any worse, Carol. It's terrible. But there is a virus that seems to be sweeping through the U.S. and the world, in fact, every other year. And it starts increasing, picking up in August and runs through November. And it leaves in its wake paralysis and affects mainly children, average age of 5. And so the CDC is saying, hey, it's August. It happens every even year. 2020 is an even year. So if you have children and they start complaining that their arm doesn't feel strong or their legs are suffering a little bit, especially if they've had, a little bit of a cough or a fever a few days ahead, be on the lookout for that.
What is it called?
It's called acute flaccid myelitis. People call it like a polio-like syndrome, but it's not polio. They have looked for the cause of this, and they haven't been able to identify it. There is not polio in these kids, and so we know that that's not what it is. They think it's an enterovirus. It's called D68, and they see higher levels of that viral infection, but it's hard to catch because as we're seeing with testing with coronavirus, it's just difficult to catch it.
Right. So it's kind of a warning to parents, especially amid with everything else that's going on. And it's very important that you do kind of catch it early, correct?
Exactly. So the thing is unfortunately, for kids who start showing the signs of muscle weakness and paralysis, many of them actually don't fully recover from it. There have been very rare cases of death, but there is this paralysis that can persist. So they want to get kids treated right away so that they can do an MRI, figure out if there is something in their central nervous system that's causing it, and start immediately rehabilitation efforts and things to keep their muscles strong so that what they don't lose, they will continue to be able to use going forward.
I have to ask. No, go ahead. No. You please finish.
So what they're worried about is that parents are going to say, oh, you know, he did have a little bit of a fever, but he's feeling better now. He's complaining that his arm or his leg's bothering him, but coronavirus is out there. We don't want to go to the doctor. We don't want to go to the hospital because we're afraid that it's going to get worse, and maybe we'll just watch him to see if he gets better. And the paralysis can happen just in hours. So it's very important, if that's what you're seeing in your child, to call your doctor, go to the emergency room.
It's terrifying. Your story, you mentioned that the average age was 5. I mean, and the cases have been rising, correct?
Yeah, they have been rising, but it's also important to remember that it's very, very rare.
Yeah.
And of course, probably the vast majority of people who get this enterovirus don't have any complications at all, right? It's probably thousands and thousands of people who get it. And the numbers we're talking about are less than 250 in 2018. So the numbers are small, but we started seeing this significant increase in 2014. There were 120 cases in 2014, and then it increased in 2016. We were up to 238 or so in 2019, or 2018. Now we have seen already, even before August began, 16 cases so far this year.
All right.
So, yeah.
So we're seeing a lot. You know, I'm not a dark person, Michelle, but I got to say that there is something with viruses and viral infections. It feels like we're seeing a lot more that are, you know, very difficult to overcome.
That's very true. And this is affecting kids. Coronavirus is affecting older people. Influenza is just around the corner. That hits everybody. You know, the good thing is, Carol, social distancing, wearing a mask, it protects against all of these things.
Isn't it amazing that I feel like there was so much pushback and now we've got kind of everyone? I mean, the medical, you know, you go to CDC and you go to various medical websites, they explain why masks make sense. It's so simple, but it really does make a difference.
It really does.
All right. Michelle, one more thing for us to worry about. All right, but we appreciate it. Michelle, thank you so much. Michelle Cortez, she's our senior medical reporter at Bloomberg News, joining us from Minneapolis. Check out her story, and I'll put it out on Twitter. It is indeed the most read story on the Bloomberg in the past 60 minutes. All right, coming up, as we promised, we're going to do a deep dive into education on this Tuesday, and we're going to check in with Emily Oster. She's a professor of economics at Brown University, and she's been writing about school pods and micro schools. And what's interesting is she's got some concerns that this will ultimately worsen inequality when it comes to educational access. So we're going to get into a conversation with her. And then our small business survival guide, it is back again this week. And this time we're going to take a little bit more on how businesses are preparing for uncertainty. Because as we talked about with Doug earlier, many people, they're just not quite sure what this second half, how it plays out for us as a result of the virus. All right, let's get back to world and national news headlines. For that, it's over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. New York is adjusting its quarantine list, adding Rhode Island and removing Delaware and Washington, D.C. People coming from states on the list are required when they reach New York or New Jersey to quarantine for 14 days. New York Governor Andrew Cuomo and New Jersey Governor Phil Murphy made that announcement today. And also today, New York City's top public health official, Dr. Axiris Barbeau, resigned. She says she was deeply disappointed with Mayor Bill de Blasio's handling of the coronavirus outbreak. Public health officials have criticized de Blasio's decision to strip the health department of its responsibility for contact tracing and give that job to the public hospitals. For the latest on the coronavirus pandemic, tune in tomorrow at noon on Bloomberg Radio and TV for Balance of Power, when Bloomberg's David Weston will interview the nation's top infectious disease expert, Dr. Anthony Fauci. Well, President Trump has signed the Great American Outdoors Act that addresses a major maintenance backlog at the nation's parks.
This bill provides nearly $10 billion for long-delayed maintenance projects, repairs, and upgrades to make the national parks greater than they have ever been before.
Funding for the projects will begin in 2021. The U.S. Embassy in Moscow says it has no news on the whereabouts of an American convicted in June of espionage. Despite reports he's being transferred to a prison colony in central Russia, Paul Whelan's brother says on Twitter he appears to be on his way to a prison camp in Moldova. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, and joining me right now is Charlie Pellet. And Charlie, I know you watch this very closely because you're someone who travels a lot. There's a couple of stories about the airline industry on the Bloomberg today. One is on EasyJet, and they talked about seeing a stronger than anticipated rebound in passenger demand following the lifting of lockdown. So check this out. EasyJet saying today that its aircraft flew 84% full in July.
Unbelievable. There are two ways you can go on the stories because we have got two completely different stories covering the same industry. And I was struck by both of them. First of all, as you say, the EasyJet story, let's first of all identify what that company is. It's Europe's biggest low-cost carrier, flies out of Luton in the United Kingdom. It's got many, many, many bases throughout Europe. You want a cheap fare, you got a couple of choices in Europe, but one of the UK-based airlines is EasyJet. But I was stunned, Carol, by just how full their planes were during July. I believe the story says they were flying at 80% full flights. That just seems to fly in the face of logic.
Yeah, and they're saying bookings for late summer are also ahead of projections. They're going to operate at 40% of capacity in the quarter through September. So, and that was up from, I guess they were planning about 30%. So they are encouraged. The stock is moving. And then, as you said, there's two sides to every story. The big three airlines that are unlikely to dismantle the regional carrier model anytime soon. But what's interesting is we're talking about ExpressJet Airlines. They're one of the largest regional carriers in America and one which plans to shut down this year.
Yeah, it is unbelievable. In fact, it's worth putting that shutdown in context. It is the fourth American regional airline to collapse since the COVID-19 pandemic. We have seen what has happened to air travel here in the United States, absolutely decimated. In fact, United is almost, in a sense, tweaking its model so it can cater to more leisure travelers because business people, they're not going anywhere.
Yeah, exactly. And that's something we've heard from a lot of CEOs, the anticipation that that's not going to start anytime soon. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are drifting lower. Little change right now on the S&P 500 index, down by about 0.1%. S&P has been fluctuating. Again, the S&P down 4 right now. The Dow holding on to a 33-point gain, up 0.1%. NASDAQ is slumping 33 points, down 0.3%. 10 years up 12.30 seconds. The yield now 0.51%. Gold up 1.4% at 2,004. Yes, a record on spot gold. West Texas Intermediate crude up 1.6%. 41.66 for a barrel of WTI. Equities swinging between gains and losses, small gains and losses, as investors try to gauge the outlook for a stimulus bill to blunt the economic impact of the coronavirus pandemic. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this story, too, among our most read on the Bloomberg, this Bloomberg Business Week story, it's about the London traders that hit a $500 million jackpot when the price of oil went negative. Remember that story back in April? Well, Liam Vaughan is a financial investigations reporter at Bloomberg News. He joins us on the phone from London, along with Bloomberg Business Week editor Joel Weber. He's on the phone in Massachusetts. Joel, this is, about being a guess on the right side of the trade or just making a really, really smart bet.
Yeah, I mean, look, like this, the day that oil went negative was one that, people were not really prepared for it. And, despite a couple warnings from CME that it was might have been a possibility when it happened, I just think it took a lot of people by surprise. I guess there's a couple people in the world who could have been prepared for it. And that's sort of what Liam managed to unearth with this firm, little known in London, called Vega. And Liam, bring you in here. What did you discover about how they pulled this off?
Yeah, so there was a lot of how exactly oil had fallen as far as it did. Like, as you say, there was some expectations because there was no demand for oil at the moment. Nobody's driving anywhere and nobody's making much. So, there's this kind of very unusual technical circumstances why you'd expect oil to be very cheap, but nobody really predicted it would go as far as it did. I mean, it literally fell $40 in a little over an hour. And so there was sort of ummings and ahhings about whether maybe some sort of at least disrupted trading was responsible. And we managed to find out that actually there was a firm, this tiny little firm called Vega Capital London, which is literally, an office above a pub with a few desks. Most of the guys there trade from home. They're predominantly ex-pit traders, quite kind of grizzled, long in the tooth veterans of the oil market, who, a lot of the times used to buy and sell oil using hand signals, have managed to stick it out. And then this particular day, owing to these, unprecedented swirling movements in the market, were on the right side of this trade and managed to bag $500 million, which, considering the size of the firm, and I think, considering their normal earnings capacity, is just an incredible sum.
It's mind-blowing, and I love how you say in your story, Liam, this is a company, as you said, most of them are working from home, there's not a lot of information, and that their website, the company website, has remained under construction on LinkedIn since it was founded a few years ago, right? So there's not a lot known about this firm. So is it a case that they were just on the right side of obviously they were, but how were they able to pull this off? And I just wonder what regulators, they've got to be scratching their head about how did this firm do it?
Yeah, so our very own Matt Levine is really good in explaining this stuff. And he's absolutely right in sort of couching it as somewhere between hedging and potential manipulation. And that's the kind of messy quagmire that the regulators are going to have to sort of get through and make a decision on. But essentially what they were doing, and what is a kind of feature of the oil market, is that you can buy oil throughout the day but not know the price, and you just agree to buy oil or sell oil at whatever the settlement price ends up later that day. So what these sort of canny guys did, knowing that we were likely on a very downward day, is they bought up as much oil in this kind of what's called the trade at settlement market as possible, which meant that they were committed to buying thousands of barrels of oil at whatever the price was at 230. But then throughout the day, they're also selling oil to kind of offset their position. And, according to our sources, they were selling very aggressively in unison in the last kind of, period of the day, few minutes really of the day. And their trading coincided with a complete exodus of buyers, and it contributed, to this massive downward fall in the market. Now, as we point out, there are strict rules around trading at settlement. You're not supposed to trade in such a way as to try and deliberately move the settlement price to try and profit in another market. And people have been, in trouble for that previously. And so what the regulator will have to determine is whether these guys who were aggressively, hammering the market at the end of the day were legitimately hedging their position, or they were actually trying to blast through the market. And that remains to be seen.
It gets really technical there. And one reason, Liam, that as you write in the story, that this is complicated for regulators is something that you also know a little bit about from your book, because bringing a case, you actually have to show intent, which means you have to get your hands on some stuff that shows, in paper, in writing, that somebody knew what they were doing. So how often are regulators able to pull that off?
Yeah, thank you, Joel, for mentioning the book. I just written this other book called Flash Crash, and it is worth mentioning because it's actually strikingly similar situation to this, whereby you had the flash crash in 2010, and there was this big sort of scrutiny after the event, and then a couple of years later, it emerged that this guy, Navinder Sarao, in his bedroom may have, through his disrupted trading, actually been a significant contributor towards it. And this is a very kind of reminiscent situation. And yeah, to your point, historically, the CFTC and other authorities have really struggled to bring and make stand manipulation cases, because it's not enough just to sort of show from the data or even from messages and things that people intended to move the market. You have to actually kind of show with beyond a reasonable doubt that the market wouldn't have moved anyway, and it's actually very hard to do that. So in the Sarao case, the reason he got in trouble is because when they arrested him, they found his computer, and there was actually videos of him unbelievably trading. And it also, quite early in his career, he sent emails talking about his plans to sort of manipulate the market. So they had that hard evidence, but Sarao was pretty careless in that respect. And if these guys or any traders have been sort of following the news over the last few years, they'll be pretty savvy to the need to communicate in a effective and efficient way. And a lot of means of communication these days are fully encrypted and stuff. So
right.
Even if the regulators suspect there's something untoward here, actually being able to charge anyone is a different matter.
Well, it's pretty incredible, and as sophisticated and complicated, and even with all the regulations we have, to see this kind of a trade, it's pretty remarkable. Liam, thank you so much. Really appreciate it. It is, as we said, among our most read stories on the Bloomberg. Liam Vong, our financial investigations reporter at Bloomberg News, joining us on the phone from London, along with Joel Weber, editor at Bloomberg Business Week. He's on the phone from Massachusetts. And do check out Liam's book, Flash Crash, A Trading Savant, A Global Manhunt, and the Most Mysterious Market Crash in History. That book just came out in May of this year. All right, coming up, we're going to talk a little bit more about education. And for those of you listening in New York, D.C., and San Francisco, and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. This is Bloomberg Business Week on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. S&P back on the plus side. A little changed. Has been fluctuating. The Dow higher. NASDAQ lower. Gold at a record. Equities swinging between small gains and small losses as investors try to gauge the outlook for a stimulus bill to blunt the economic impact of the coronavirus pandemic. S&P 500 index edging lower after Senator David Perdue said it was likely a deal could take as long as 2 more weeks. Here's where we stand. S&P 500 index up a point now, higher by 0.1%. The Dow up 90, up 0.3. NASDAQ lower by 12, a drop there of 0.1%. Gold pushing higher, up $28 the ounce. Spot gold up 1.4%, now at 2,005. The 10-year up 13.30 seconds with a yield of 0.51%. West Texas Intermediate crude up 1.6%, 41.66 a barrel. Walt Disney shares pushing higher by 1.1%, just about an hour away from the latest numbers out of the Walt Disney Company, also out of Fox. Disney shareholders are bracing for an earnings report likely to reflect a tough period for the media powerhouse, which has been crippled by a near halt in new TV programming and with a majority of its theme parks shuttered. Michael Nathanson is founding partner of MoffettNathanson, and he's told Bloomberg Television this morning he downgraded the stock in May, citing numerous challenges facing the entertainment giant.
Just a headwind in their legacy businesses and parks and movies and live sports and cable networks. There's so much pressure pushing those businesses the wrong way. Yes, they've got a great streaming story at Disney Plus. That's great news, but where they make money, where they really drive cash flow, there's so many headwinds.
He was interviewed this morning on Bloomberg Surveillance. This headline from the Bloomberg Professional Service: Virgin Atlantic Airways Limited has filed for Chapter 15 bankruptcy in New York. Again, recapping equities trading mixed. S&P holding on to a gain now of 2 points, up less than 0.1%. The Dow higher, NASDAQ lower. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
So we have talked a lot about the pandemic's impact on education and how it has revealed once again the inequalities when it comes to education across the country. Our next guest writes that private school pods are coming and that they will worsen inequality. In today's Business Week Economics, joining us is Emily Oster. She's author and professor of economics at the Watson Institute for International and Public Affairs at Brown University. She's also a Bloomberg Opinion columnist, and she joins us on this Tuesday on the phone from Providence, Rhode Island. Professor Oster, so nice to have you with us. Welcome to Bloomberg, or welcome back.
Thank you for having Thank you for having me back.
So talk to us a little bit about these pods, these micro schools and school pods that you envision happening.
So I think we're seeing a lot of these in places where schools are either opening fully remotely or opening in a hybrid model, or where people are worried they're going to move to fully remote. And what's happening is that people are sort of getting together with other parents and forming their own, maybe micro schools is a better word for it, for homeschool groups, where they the idea is that the kids will learn together, either zooming into a class together and then doing some social activities together, or going all the way to like having their own individual school with its own curriculum.
Right. So you have these parents, and certainly those with the means, who can either hire private tutors, private teachers, right, to teach these pods or these micro schools, and that will give them certainly an advantage over others.
Yeah, I mean, I think we're going to see a lot of different versions of this. There's this sort of like 1%er version that you're talking about, where like we hire our own teacher, we have our own elaborate, school with field trips and God knows what. And then there's kind of more of the thing that I think we probably will see a lot of, which will be kind of a group of parents who get together and maybe split the work amongst themselves, just recognizing the reality that, kids may need some social interaction, and it may be infeasible for parents to supervise their kids all the time. It may be easier to share it.
Well, what worries me, and I mean, this is something that it's been around for a while, but certainly the pandemic exposed it even more, about the inequalities in terms of access to education, or whether it was access to the internet to be able to study online. So, you see this, and I understand why, of just making that situation or those inequalities even greater.
Yeah, I mean, I think that this kind of, even if you put aside the kind of people hiring their own teacher, there's inequality in who has time, who has like a stay-at-home parent, who has multiple parent households, and has the ability to kind of supervise a group of kids and provide the kind of enrichment that people are talking about. That's not going to be as available to people who are working at lower income jobs, maybe who are single parents who have fewer resources. And so I think there is a very real inequality all the time in the way that we do education, and this kind of fall down of public education makes it worse.
Where are education reformers, education, administrators on all of this? They've got to be watching. It's really what's fascinating about this time, and we talk about this a lot on air, is about in times of crisis, right? We often, unfortunately, because we have to figure out ways to do things maybe more expeditiously or in a better way. And I'm not necessarily saying this is a better way, but I think we are all taking a very deep dive and taking a look at education and maybe how we can improve it. And I do wonder if there are reformers, kind of educational reformers, looking at this and thinking, okay, how do we, really address the underlying problem, which is the inequalities in education?
Yeah, I mean, I think that this has put in our faces a lot of things that were already there around inequality. And, one is in sort of like the access and the home environment that people have. And I think this puts that in relief. I think there's also things about, as we talk about schools physically opening and we realize, here's a school district that's getting all of their kids Chromebooks so they can make sure that to have a seamless transition if they have to close. And here's another school district where, every school has a nurse for 1 hour once a week. And how can they possibly open in the middle of a viral pandemic? They don't even have school nurses or colored pencils. And so there are already all of these inequalities, and I think that this has pushed those really to the fore for many people, and made people recognize them. And in some ways, I think that if there's a silver lining, it's that people are you may sit up and say, this is not okay. It wasn't okay. It's not okay now. It wasn't okay before.
Well, do you think we get to a better outcome ultimately, and we do come up with some solutions so that the inequalities that have been around for a long time, unfortunately, go away or at least are reduced?
I would like to think that. I mean, I'm concerned that really what's going to happen is the next year is going to be more or less lost for a large number of kids, and so even if we end up in even if this galvanizes some change in the long term, it would be important to recognize that there's a cohort of kids who are just really going to lose.
Well, and what do you think the solution is? I mean, I think this is something, that we talk a lot about on air too, is about what is the solution, as we all are still very nervous, certainly in certain parts of the country, about having kids go back to school, concerned about the teachers who might be exposed. What is the solution? Is there a hybrid solution that you guys see? I mean, I'm curious even at Brown what you guys are talking about, so that people can still get kind of the on-campus experience, but do it in a safe way.
Yeah, I mean, I think that the short answer is I think we would need to prioritize this, that this would actually need to be something that's important to people. And, one of the things I've found the most frustrating, I think many people in this space have found frustrating, is, in Massachusetts, there's a lot of talk. Massachusetts is doing pretty well. There's a lot of talk about, well, maybe we shouldn't open. Maybe you should only open a little bit. And, my email is full of invitations from indoor water parks. Like, come to our indoor water park. It's open. It feels like, well, somehow we've missed a priority if that's open and we're not sure we're going to open, schools for kindergartners.
Right.
So I think that piece of kind of like just we have to make this important. If it's going to happen, we have to be willing to make other sacrifices
in
exchange for doing this. And the same is true of, opening universities, and sort of there are going to have to be some aspects of the university life, like fraternity parties, which we're not going to have if we want to have in-person learning.
Right, but prioritize so that we make sure that the really crucial components of our economy or our education are able to open. Professor Oster, thank you so much. Really appreciate it. Emily Oster, she's professor of economics at the Watson Institute for International and Public Affairs at Brown University, and as I mentioned, also a Bloomberg opinion columnist, joining us on the phone from Providence, Rhode Island. All right, you're listening to Bloomberg Business Week. Let's get back to world and national news headlines. For that, it's back on over to Nancy Lyons in our D.C. studio. Hi, Nance.
Hey, Carol. President Trump continues to insist the U.S. has coronavirus cases fewer than the rest of the world because it does more coronavirus testing. We get more on that from Bloomberg's Nathan Hager.
In an interview that aired on HBO last night, Axios reporter Jonathan Swan pressed President Trump on a country that seems to be ahead of the U.S. curve.
South Korea, for example, 51 million population, 300 deaths. It's crazy.
You don't know that.
I do. It's
You don't know that.
You think they're faking their statistics, South Korea?
Swan also asked how history will remember the late Congressman John Lewis.
I don't know. I really don't know. I don't know. I don't know John Lewis. He chose not to come to my inauguration. He chose. I never met John Lewis, actually.
Nathan Hager, Bloomberg Radio.
Senate Republicans are expressing frustration on efforts to draft a new coronavirus relief bill, saying big differences remain. Senator Mitt Romney says time is of the essence.
I'd like to see that deal get done as soon as it possibly can be done, and those people that are doing the negotiating need to be working around the clock to get it done.
The two sides are meeting again this afternoon. President Trump has signed into law legislation that will devote nearly $3 billion annually to conservation projects, outdoor recreation, and maintenance of national parks and other public lands. And the White House says it is monitoring the situation in Beirut after a massive explosion rocked the downtown area today. Early reports said much of the port had been flattened in the blast. Witnesses saw many people injured by flying glass and debris. The Lebanese health minister says more than 25 people are dead. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our D.C. studio. I'm Carol Masser. Right now joining me is Charlie Pellet. And Charlie, do I understand you're getting ready to take the CFA exam?
No, not for a long, long time. But you know what, Carol? When you're there, I'll be there with you. How does that sound?
Deal. We'll go in together. And when we do it, it seems like we're going to be doing it, if we do it anytime soon, online.
All right. And perhaps this is why I will never take the CFA exam, because you know what went right to my mind? There are 4 sections of the CFA. Financial reporting, that's the biggest. You got economics, you got quantitative methods, and you've also got integrity. Now, what went right to my mind? I know you wouldn't go there. I know Tom Keene, our CFA, wouldn't go there. But what went through my mind is if you're taking this thing on computer, couldn't you perhaps look somewhere to get some of the answers?
No, listen, lots of kids are taking exams online nowadays. I mean, they've got, protocols in place to make sure that nobody's cheating is basically what they're saying. I mean, but listen, I just think this is the world we're moving to. And the story that's on the Bloomberg, Charlie, that you brought to our attention is that all 3 levels of the CFA exam will move to a digital format for 2021. And I guess they had originally planned to move the first level to computers next year. So the 2020 exam in December, that will be the final one completed with pencil and paper. It sounds so old. But I do wonder, what?
There's money to be made with T-shirts saying, I took the last paper CFA exam.
What's interesting is they're moving it. I guess it doesn't necessarily confirm that they're going to stay that way. Or is that, I guess...
Yeah. Listen, Carol, once you go down that path, how can you ever go back to paper? I mean, it makes so much sense to do this thing. And to address my concerns of other people who might be looking at answers, they're going to be doing this thing at locations rather than letting you go home and take it from home.
Yeah, exactly. I mean, listen, there's a lot of, like I said, protocols in place. But, man, I think we're going to be increasingly doing more and more things online. Look, we're talking about voting, right, in an election year, and having maybe the access, certainly for mail-in votes, but I wonder when online voting will be allowed. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks mix, gold at a record. The Dow, the S&P both higher. S&P little change. NASDAQ lower. Let's get all the details as we head over to the First Word breaking news desk. And here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks have fluctuated and right now are mixed as investors weigh the outlook for a stimulus bill. Dow's up 95 points. S&P is little changed with the NASDAQ down 10. U.S. 10-year yield is at 0.51%. Gold soared above $2,000 an ounce for the first time ever, and small caps are higher by 4 points. 8 of the 11 main S&P sectors are trading higher, led by gains in energy and materials, while healthcare and financials are trading lower. NASDAQ biotechs fell 1.1%, transports rise 95, semis gain 20, while the VIX is lower by 1%. Leaders in the Dow, Dow Inc., Exxon, and McDonald's, while Microsoft, Merck, and Nike are the worst performers. After earnings, Mosaic rallied to a 5-month high as second quarter profits beat estimates. And regarding deal news, Evergy fell after a report it will remain independent after talks with several potential buyers. In other news, the SEC is reportedly investigating Kodak's announcement of last week's government loan. And wrapping things up, look for earnings from Activision and Disney after the bell. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, thank you so much, Charlie. So in this week's edition of Bloomberg Business Week Small Business Survival Guide, we've been talking a lot about small business and how they're getting through the pandemic. We're going to talk this week about preparing your business for uncertainty, which is one thing I feel like we kicked off the show, Doug Krisner, talking about that specifically. Joining us right now is Bloomberg News editor Dimitra Kasanides. She joins us on the phone, and I believe she's in New York City today, along with Hunter Lovins, board member at Simplify Power, on the phone from Colorado. Great to have both of you with us. Dimitra, let's kick it off because you've been, tracking small business for us week to week. Tell us a little bit about the thinking on this week's topic, because I do feel like the one thing people are certain about is that they just don't know about the rest of the year and really 2021.
Exactly. It's true. And, what was compelling about this, especially to Nick, we talked to him before also, Leiber, when he first met the folks at Simplify Power, they are makers of sustainable, safer batteries based in California. We've written about them before, and we've been in touch with the CEO. He's recently been in touch with Hunter and talking about something they've done called scenario planning, which really has been an incredibly useful tool to anticipate. I mean, it's not really about, it's sort of putting different scenarios before people at the company and really testing out, what the company can withstand, how it can react, what it can do, what tools it has. It can be something that you use to decide about your supplies, about, how much you need to kind of stockpile in terms of whatever it is that you make, how you're going to deal with getting products to your customers. So to some degree, to a very large degree from what we've heard from them, this has really been very helpful to them in weathering this period in a way that many of their small businesses haven't been able to.
So Hunter, come on in on this. And, it's so timely because tomorrow I'm getting ready to talk to, we have a group of CEOs that we regularly talk to as part of our Bloomberg Live breakaway group. And they're all wondering about reopening and what their, second half looks like. And this whole idea of scenario planning, I think, fits right into this. Tell us a little bit about what you guys did and how it really helped you.
It's the most powerful tool I'm aware of for a business to figure out how to deal with uncertainty. It's in effect an over-the-horizon look at what might be coming at you, which then enables you to test your strategy against a variety of mutually inconsistent but plausible possible futures. The goal being to find a strategy that, as Royal Dutch Shell, which invented this discipline, calls a no-regrets strategy. And it's a process that I help companies go through in a very short period of time. At Simplify, I showed them a PowerPoint presentation the evening before, then it took about 4 hours the next day. They involved basically everybody in the company. And even if you got no value out of the scenarios, just getting everybody in the company together and surfacing your assumptions is an incredibly good way to engage your employees. In this case, time we did it November last year, the crew was not being terribly imaginative in terms of what could go wrong. And I said, guys, get a little wild and crazy. What if we had a pandemic? And Catherine von Berg, the CEO, looked at the ceiling, rolled her eyes. But then she started thinking, Simplify gets a lot of its materials from China. What if there were a pandemic? What if our supply chains broke down? What if it came here? How would we keep the company operating? And so she started putting in place the mental capacity so that when in December, word started coming out of China that there's this weird disease that's killing people, she went into overdrive. And as a result, the company's profits this year are up about 30% over last year. It's doing very well. It was shut down for all of 2 days over a weekend to do a deep cleaning and to put in place the safety provisions. It was deemed an essential enterprise, and it's rolling. It's doing just great.
Hunter, how wild is that a year ago that's exactly the kind of crisis situation that you guys brought up?
The discipline of scenario planning has you look at what are called the steep forces: social, technological, economic, environmental, and political. What's really happening out there in the world where you might want to think about what's the impact of this going to be on your company? And one of the things that's been predicted by the scientists for a long time is pandemics. It's not an implausible outcome. So I was just trying to get them to think about what could go wrong, guys, and how are we going to deal with it if it does?
Yeah,
and then it did.
It's pretty remarkable. And Dimitri, just got about 30 seconds here. I mean, yeah, it is pretty, when you think about scenarios, that's not maybe the first one that comes to mind, but, here we are.
No, absolutely not. I mean, I suspect, again, Hunter probably used it as one of many examples out of those areas that we touched on. It just so happened it was happening.
Yeah.
Whatever your business, this can be super useful. You're gonna customize it in different ways, but it's very forward-looking.
Well, this was great and really helpful. Dimitri, thank you so much. Cassanides, editor at Bloomberg News, and of course, Hunter Lovins, board member at Simplify Power, joining us on the phone from Colorado. This is Bloomberg Radio.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You're listening to Bloomberg Business Week on this Tuesday. Carol Masser, and we're just about 29 minutes away from the closing bell. Coming up, though, we're going to get that chart of the day from Dave Wilson, and then, of course, we'll count you down to the closing bell and some of those earnings expected, including those numbers from Disney. Let's get back to the markets, though, and to Charlie Pellet.
All right, thank you very much. Of course, you can't forget the song of the day. Hoping it's stormy. We'll find out. We've got the Dow, the S&P. They are both higher right now. NASDAQ on the minus side right now. 28 minutes to go ahead of the closing bell. Stocks have been fluctuating. Key takeaway right now, we've got stocks really little change with the S&P up by a point, 32.96, up by about 0.1%. NASDAQ down 7. That is a drop of 0.1%. The Dow holding on to a 92-point gain right now, up by about 0.4%. Equities swinging between small gains and losses as investors try to gauge the outlook for a stimulus bill to blunt the economic impact of the coronavirus pandemic. A lot of investors, too, awaiting Friday's jobs report. We've got gold trading at a record right now. Checking the precious metal, it is up $32 the ounce. It is at a record 209.18 right now on spot gold. That is a gain of 1.6%. And crude is pushing higher, up 1.4%, 41.58 a barrel. The 10-year yield, 0.50%. 3:32 on Wall Street. That means it's time now for the Small Business Report. Here's John Tucker.
Today we're talking to Jake Carter. His family's been farming a 330-acre plot of land in Georgia for 5 generations. When small farms like his could no longer compete in the dairy industry, he switched to agritourism. People visit Southern Bell Farm to pick their own. Jake, how is business going in the pandemic?
We're concerned, yes, just like everybody else, like the uncertainty. So we had thoughts of even mowing down our crop because we didn't want to see it waste. But we ended up opening the doors to the farm just to see how things would play out. And this was back in April. And people started showing up. And we started a drive-through service where people could come and get fresh-picked strawberries, and then ended up finding a way where we felt comfortable opening up our U-Pick fields in a social distanced way so that people could feel safe to pick their own fruit. So it actually turned out, I think people were longing for a sense of normalcy, and I think they responded very well and felt safe coming to our family farm.
So after being cooped up in their homes, it was a way to get out and do something and do it safely.
Right. I mean, I think a lot of people in our part of the country, springtime means strawberry time. And I think after being cooped up, you know, just everybody wants sort of a sense of what spring is supposed to be about. And I think that was one of the encouraging things that we saw, that people were, you know, still able to find a way to come out and feel safe doing it and enjoy spending time with their family first and foremost.
Jay Carter of Southern Bell Farms in Henry County, Georgia. Thanks a lot. And we're going to continue to bring you stories of small businesses trying to survive and thrive during the pandemic every day at this time at Bloomberg Radio. That is your Bloomberg Small Business Report for today.
And John Tucker, we thank you. China's state-run media has struck back in the war over TikTok, branding American demands for the sale of the social media app's U.S. operations to Microsoft as, quote, theft, and suggesting Beijing may block the transaction. Microsoft down 2.3%. Recapping equities mixed, S&P holding on to a 3-point gain of 0.1%. Gold at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Well, hello there, Carol Masser. Sorry,
Nice of you to join us.
I got a little bit waylaid. You should see my house right now. A lot of generators happening and a lot of wires going everywhere. But you know what? I can't be away from you.
Oh, well,
and
glad.
I can't be away from Dave Wilson. That's coming up. Chart of the day. This is Bloomberg. Little Peter Gabriel,
Yes.
little Big Time.
Nice.
You know, nailed it. Yeah, I just needed some time
come
to
on,
prepare.
that is so easy.
All right.
Come on,
me a little
everybody,
credit.
everybody out there in the universe, easy, yeah, easy.
Wow. Dave Wilson coming in hot. Carol Masser is back from vacation. She's just mad she didn't get it yesterday. All right. Dave Wilson, talk to us about your chart of the day.
Well, it's big time for what I would call the fan mag stocks. Think the FANGs, so Facebook, Amazon, Netflix, and Google's owner Alphabet. Throw in Microsoft and Apple to that, and you've got 6 companies that, as of the close of trading yesterday, they were more than $7 trillion in market value combined. I mean, it's a staggering number. And, I saw this chart on Twitter a couple weeks ago that a blog called Macro Markets Daily put up, where they compared the market value of these 6 companies with the value of all the companies as they're represented in 6 developed market stock indexes. We're talking about Canada's S&P TSX Composite, France's CAC 40, Germany's DAX, Italy's FTSE MIB, Spain's IBEX 35, and the UK's FTSE 100. So you put together all the shares included in those indexes, and those 6 companies have more market value than the 6 markets do. I mean, it's just, it's a comparison that really gets you in terms of how much value these companies have acquired over time. $7 trillion, it's a pretty staggering figure by itself. But when you put that kind of perspective around it, it just goes to show you how big these companies really are in stock market terms and how much they matter for U.S. investors right now. And actually, Macro Markets Daily, I saw they had an update of this chart out today. And, yeah, they come to the same conclusion. The companies, they matter more than the indexes in terms of market value. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. It may take me a little time since I don't have power right now, but in any case, I will get it to you. Just send an email to dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Do you have a generator too, Dave, or no?
I do not.
So you're on your cell phone?
I'm on my cell phone, absolutely.
The things he does for the chart.
Wow, that must have been a pretty
You do what you
charged up
gotta
cell
do,
phone.
You do what you got to do. I'm just grateful the Verizon service is still up and running. So
Yeah.
There you go.
Well, we're
There
so
you
grateful you were there. So thank you so much. Really appreciate it. Dave Wilson giving us the chart of the day. He'll be back a little bit later on with his stock of the day, provided his cell phone continues to work.
Yeah. What did I miss?
What'd you miss? You missed a lot of stuff. I had a lot of people just come in and join me. It was a lot of fun.
Yeah. What did Joel have to say?
We talked about this great story. It's among the most read.
Is this
on the
Liam Vaughn's
Bloomberg.
story?
Liam Vaughn's story. Yeah. But that, and that it's like a little known firm that just made a huge amount of money when oil went negative. And so he kind of takes that apart. And of course, he knows he's got a new book out this year.
Literally
right?
wrote the book. Yeah.
Yeah. So it's really fascinating to check in with him about that. So
I'm sorry I missed him.
that's okay. And we talked a
But
little bit
here I
about education. Here you are. We have a lot more to do, and we've got some great earnings coming up on the other side of the break. But before that, we're going to get to world and national news headlines. Back on over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. The Senate is facing a question of whether to stay in session until there's a deal on another stimulus package. Republican Senator Rick Scott of Florida is not very optimistic, saying the Democrats are the problem.
They don't want to do anything. They've got all their liberal priorities. That's all they care about, and they want to play games to try to win an election in November.
House Democrats approved a stimulus plan 2 months ago, but it's more than $2 trillion over the Republican proposal. Well, the nation's parks are getting an upgrade. Today, President Trump signed the Great American Outdoors Act, which Congress passed with bipartisan majorities. Bloomberg's Irv Chapman has more from Washington.
The bill finances expansion and improvement of the national parks.
There's a very terrible term. It's called deferred maintenance. We haven't maintained our roads, our paths, our buildings, any of it, for many, many decades, actually. I can't believe previous administrations didn't do this, and now it'll be better than ever before.
The president said he was persuaded to back the expenditures by Republican Senators Steve Daines and Cory Gardner, both of whom face Democratic governors as their re-election opponents. In Washington, Irv Chapman, Bloomberg Radio.
The Florida teen accused of being the mastermind behind the Twitter hack of accounts of politicians, celebrities, and technology moguls has pleaded not guilty to multiple counts of fraud. 17-year-old Graham Clark is accused of using the hijacked accounts to scam people around the world out of more than $100,000 in Bitcoin. He remains in jail with bond currently set at $725,000, but that could change at tomorrow's bond hearing. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy,
Can
thank
I
you so
just
much.
say the sun just came out? I don't know
Well,
about you.
Can you send it up? No.
Well, you'll get
we have no
it.
sun. We
You'll
have
get
no
it after
power.
me.
I
You'll
mean,
get it
basically
after me.
Westchester, and I think big chunks of New Jersey too. Obviously, Dave Wilson. The power outages are massive. I mean, I was looking at the outage map. It's going to take a while to get back on, but
There's
we
about
soldier on.
there's about 1 million, I think, that are out of power in the New York Metro right now.
Yeah,
and stuff.
that checks out.
But you'll get some sun. I'm sending it your way.
Okay, well, I appreciate that. Yeah, and you get a nice little preview. It's how it works here. You're
That's
always
right.
you're always
It
first.
works
to
its
things.
way up north, right?
Exactly. And future also looking a little brighter. See what I did there?
Mm-hmm.
For Manhattan real estate. We've been talking a lot of dour forecasts for Manhattan real estate, but Facebook, look at them coming in. And a big deal at a Vornado building, the Farley building, there in Manhattan. And Stephen Roth, obviously, he's the CEO of Vornado. He's talking his own book a little bit, but he says New York City continues to be the place to be. Okay, cool.
Well, yeah, and he is talking his book. But listen, this goes into that bigger conversation you and I have been having about everyone saying, okay, the demise of cities. And yet, I think there's going to be some great opportunities for people who obviously know longer term that there will be no great demise of cities, and they can pick up some real estate space right now, probably, a lot cheaper than it was back in February or January.
And what's interesting is, if you don't know the building that I'm talking about when I say the Farley building, if you've ever been to Penn Station, you do know it. It is a massive, very beautiful and big building right there across from Penn Station. And this is the sort of thing that could continue to reinvent that neighborhood. I mean, Penn Station, gross. I don't think that's a hot take in any sense of the word. Used to be a beautiful building. Now it's not. But, having a tenant like Facebook there at the Farley building could up the neighborhood a little bit.
Well, absolutely. It's certainly a part of the city that I still feel like needs some work. And listen, this has been, I think Dave kicked this off at the top of our show, talking about some of the realty names. Vornado Realty, as a result, is up about 6% in today's trade. So investors definitely taking note of this news. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. 13 minutes until we hear from Fox and the Walt Disney Company. Stocks higher across the board right now. Gold holding at a record. Gold right now, by the way, let's begin there, up at 2014. Talking about spot gold, up $37 the ounce right now. That is an advance of 1.9%. So again, gold at a record. Equities pushing higher with the S&P higher now by 5 points. We are looking at a gain for the S&P of 0.2%. NASDAQ little changed, higher by 7 right now, giving up earlier losses. And the Dow Jones Industrial Average is up now by 114 points, a gain there of 0.4%. 10-year yield 0.50%. We've got gold, as I mentioned, at a record. West Texas Intermediate crude up 1.3%, 41.53 for a barrel of West Texas Intermediate crude. Equities have been swinging between gains and losses, but right now investors trying to gauge the outlook for a stimulus bill to blunt the economic impact of the coronavirus pandemic. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Jason Kelly and Carol Massar. Forgot where I was for a second. It's been that sort of day. It's been a disruptive sort of day, Carol Massar. So that's why we're going to talk about disruption in the stock market, disruption in stocks, and maybe some disruptive names. Happy to have with us Prabha Ram. She is portfolio manager for American Century Investments, joining us on the phone from New York City. Prabha, really nice to have you with us.
Thank you for having me, Jason and Carol.
So disruption certainly has been the name of the game here in 2020. How do you approach it as an investor? Because you have, I believe, and keep me honest here, you look after the Focused Dynamic Growth Strategy Fund for American Century. And we've had maybe not so much focus, but we certainly had a lot of dynamism and maybe even some growth in this market.
Yeah, so yes, I do co-manage the Focused Dynamic Growth Fund. And this is a fund where we try to keep the names limited, Jason, so 30 to 45 names. But what we're focused on is early to rapid growth phases for companies, and that automatically leads to innovation and disruption, just like you pointed out. And disruption comes in several sizes and shapes. We all think about e-commerce. Most of us are not going to stores anymore. We buy more online. And we've had reports that, 3 years worth of growth has been squeezed into 3 months. And apparently in e-commerce, the McKinsey report tells you that it's 10 years worth of growth in 3 months. So just astounding numbers there. But disruption is not just in technology. It also is in traditional industries. It is also in healthcare, for example. So we look at disruption pretty much across the board, if you will.
Yeah, I just want to point out, too, I mean, the fund, the American Century Focused Dynamic Growth Fund that you co-manage, Amazon, Alphabet, and Tesla are among the top holdings. The fund has returned nearly 22% on average annually in each of the past 5 years, putting it in the 98th percentile for funds in that category. So it's really been a top performer. And you do look at the holdings, and they are companies that we know. How often are you guys, since you seem to kind of keep it down to a core portfolio, how long do you kind of hold on to something that gets into one of the holdings?
So, back to what I said, we're looking at companies in the early and rapid growth phases. And I will touch on Google and Amazon, that are not particularly early, but we'll talk about that. So, however, since we get in early, we hold for long periods of time. So historically, it's been an average holding period of about 5 years, because we want to stay with these names and see them grow and get there early, obviously. So back to your question on, Google and Amazon. These are not technically new companies, but still, rapid growth phase. Amazon, for example, with the online retail, their dominance there, and obviously the trend towards e-commerce has accelerated here. And not just that, but to start this whole AWS, which really was a product that was focused internally, right? So their servers ran on this product and they made it available to the world. So we don't sit out names just because of their age. We just look at their innovation cadence and whether that leads to growth for our investors. And so Amazon fits that bill. Google the same way. They're very dominant in the digital market, but in the 20 plus years that they've been in business, they've had 20% type growth in the top line throughout that time. So obviously they fit as well, and they're obviously disrupting the digital advertising market, but also they have investments in YouTube, Android, Waymo, and the list goes on.
So disruption, as you well know, and we talk about a lot on this show, doesn't just come in the form of technology companies. Boston Beer, the maker of Sam Adams, that's one that you have held over the years. Tell us about that and the disruption and how it manifests in the beer business.
Yeah, this one is a fascinating story because it's a family-owned business in a very tough category. There are huge players in the beer business. But what Boston Beer has done, and done over and over again, is create new categories. So going back all the way to craft beers, so they were the ones that pioneered that, and then followed that up with hot teas and now hot seltzers with the Truly brand. And the Truly lemonade is really resonating, and it is a product for the times because what it has is, it is a beer. However, it has 100 calories, 1 gram of sugar, is gluten-free, and the forecasts are that the category itself will grow at 200% just in 2020. And Boston Beer is the only company that has actually gained share in this year. Obviously, with a lot of us sitting at home, we're not just working from home. It looks like we're drinking at home, too.
Yes.
So that helps.
Confirmed. That's confirmed. Yeah, and I can guarantee you that our producer, Paul Brennan, who's on vacation right now, dollars to donuts, he's drinking a Sam Adams.
Boston Beer is up 119% this year.
Yeah, totally checks out. Very briefly, Prabhat, got to ask you, just a minute left, talk about Tesla for a second. It's a name we're obsessed with. We've had a lot of bulls and a few bears on here. This has defied gravity in many ways.
Yes, so Tesla is textbook disruption, if you will. Just because the whole concept of electric vehicles, and not just electric vehicles, but the entire supply chain, and actually engineering it at scale globally. So, and then that's the first. And the second thing is this is the first automobile which is a software first model. In other words, if there is a fix, more often than not, it's coming over the air versus having to drive somewhere to get your car serviced. And then the third thing is, it's not just disruption in the car, the battery itself. However, it's also disruption in the way they go to market with the, direct to customer, no dealerships. And then we can talk about autonomous vehicles, the car, trucks, tractors, the energy storage that doesn't get a lot of airtime. But it's just, it's kind of a disruption packaged, I believe.
At every point.
That's why we own it, that's why we own it. However, of course, the controversy and the bear side of the argument has to be acknowledged as well. That being said, the innovation is there, and that's why we hold this stuff.
Absolutely. All right. Well, we really appreciate your time. Thank you so much. Prabha Ram, Portfolio Manager for American Century Investments, looking after the Focus Dynamic Growth Strategy. She's the co-manager of that fund. Joined us on the phone from New York City. You're listening to Bloomberg Business Week Close. Coming up next, some movers and shakers. Lots more on education. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another record for NASDAQ, record for gold, the Dow, the S&P, NASDAQ, all advancing, closing at or near session highs. A 12-point jump for the S&P at the close, rallying there up 0.4%. S&P now at 3306. The Dow up 165. Late session surge up 0.6%. And NASDAQ up 38 points today, a record up 0.4%, bringing its year-to-date gain to 21.94% on the NASDAQ Composite Index. NASDAQ 100 Index also pushing higher, up today by 0.4%. 10-year yield, 0.50%, up 15.30 seconds. Gold up 2% today, $20.15 the ounce. A record again, up by $38.49. And West Texas Intermediate crude up 1.4%, $41.57 for a barrel of West Texas Intermediate crude. The S&P 500 index did edge lower in the afternoon after Senator David Perdue said it was likely a deal could take as long as 2 more weeks and then bounce back. Well, as for the overall market outlook, Chris Verone is head of technical analysis at Strategas Research Partners.
We think March was a major low. We had a momentum surge coming off the March lows. I think we're just consolidating that move right now. I would fight the temptation to get too bearish.
Financial shares dipped as American International Group fell after posting a $7.9 billion loss. AIG plunging today by 7.5%. Among some of the other financial names, J.P. Morgan Chase down 0.6%. Citigroup down 0.5%. Bank of America higher, little changed, up by less than 0.1%. Again, recapping, the Dow, the S&P, NASDAQ, all advancing today. S&P up 12 points, a gain of 0.4%. The Dow up 165, up 0.6. The NASDAQ Composite Index higher by 0.4%. NASDAQ 100 Index up today by 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Move around. Motion creates emotion.
I feel the earth move under my feet.
You move like they do. I've never seen anyone move that fast.
All right, people, let's move like we've got a purpose.
Company's called Movers and Shakers. They cost a little more, but that name cracked me up.
Bloomberg Business Week, Movers and Shakers, with Carol Messer and Jason Kelly on Bloomberg Radio.
Yes, indeed. Time to take a look at some of the movers and shakers on this Tuesday. And as Charlie mentioned, we pretty much finished at our highs of the session. So what did that mean for the S&P 500? We had most names, 303 to be exact, in the S&P 500, posting gains, 199 lower, 3 unchanged. And Jason, if I look at the major industry groups, energy, your top performer, up about 2.5%. Real estate was up, as were consumer staples, both up 1.4% as a group overall. Bottom of the pack, the only two in the major industry groups in the S&P 500 that were down today among those 11 groups. Financials down about 0.4%, as were healthcare names down about 0.5%.
Apparently, one of the best businesses to be in right now, who knew? Fertilizer.
I was going to say beer.
Well, beer. Yeah, we heard that from our Drive to the Close guest. But the Mosaic Company, that's your biggest gainer. I'm reading the DES page, which describes what companies do on the Bloomberg. Produces and distributes crop nutrients to the agricultural communities located in North America and other countries. It's a fertilizer business, and they had big numbers come out, beating street estimates, and that stock, as I said, your biggest gainer in the S&P, up almost 14% today. MOS is the ticker.
What's interesting, too, I'm just watching some of the earnings crossing. Ethan Allen, the reason I want to go to it is because we've talked about how so many people are, kind of focusing on their homes. They're spending so much time at home. So Ethan Allen, fourth quarter net sales, $91.6 million. That's light. The estimate was $97.2. They also reported a fourth quarter adjusted loss per share of 15 cents. That looks like it's better because the loss that was estimate was for 63 cents a share. Quick check. on the stock in the after hours. Not like it's not really moving much here. And stock's down 27% this year. I was just curious to see if maybe they were getting a little bit of a boost because of everybody being at home.
Another earnings to get to. WW, the company formerly known as Weight Watchers, that stock is down almost 5% on their earnings, and it looks like EPS especially pretty light. Second quarter EPS coming in at 20 cents. Actually, looks like there was an adjustment there. I'm looking at another headline saying they came in at 67 cents, still a miss. The consensus had been for 70 cents. The initial headline on Bloomberg said 20 versus 70. I don't think that's apples to apples. Revenue a bit light too, coming in at 333.6 million versus 342.3 million. That has been a turnaround story for sure, and also a big pivot. Naming a new CFO. It looks like Amy O'Keefe joining the company, so we'll dig into those headlines a little bit more. Maybe in the next couple of weeks we'll catch up with our pal, Mindy Grossman.
Yeah, look forward to that. Disney out with their numbers, so let's go through it. Third quarter adjusted EPS 8 cents a share versus what was expected was a loss of 63 cents a share, so we'll have to dig into that because that looks like a big difference. Third quarter media networks revenue was $6.6 billion. That's better than the forecast of $6.38 billion. Third quarter parks, experiences, and consumer products revenue, that was $1 billion. That to me is a safe bet that that's pretty light, but we'll dig into that. Third quarter revenue overall, $11.78 billion versus an estimate of $12.39 billion was estimate. But again, that third quarter adjusted EPS, here's the red headline, 8 cents a share. The estimated was for a loss of 63 cents a share. So that looks like it's a much better number when it comes to the bottom line. Third quarter Disney Plus subscribers coming in a little bit light, 57.5 million. The estimate out there was for 59.4 million, and COVID-19 had a $3.5 billion impact on the operating income of parks, and that makes sense because they were shut down. Quick check on what the stock is doing here in the after hours. Yeah, it's down about 3.2%.
Yeah, so we'll keep an eye on that. Obviously, we'll be talking about that later on with Geeta Raghunathan just in a few minutes at the bottom, at the end of this hour, I should say. Let's check on the VIX volatility. It was down just a touch, 1.8%, closing at 23.84. This is Bloomberg. All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson, Dave Wilson back with us via phone. Power outage, it's not stopping you from the stock of the day. You will not be deterred. What is it?
No, sir, I will not. And it's Tactile System Technology. The company does business as Tactile Medical, which makes sense because they make medical devices that patients use at home. They're designed to treat chronic swelling and other ailments. The company was founded in 1995, went public just about 4 years ago, July 2016. The ticker is TCMD. Now, Tactile System shares rose more than sevenfold from their initial price through February of last year when they set a record. Since then, they've given back most of the gain with quite a lot of volatility along the way. This year, to give you an example, the stock's been down as much as 55% from a high set early in the year. Well, second quarter results came out late yesterday, and they brought some more volatility. Here's why. The Tactile Systems reported its second straight quarterly loss, this one wider than analysts were expecting in a Bloomberg survey. And on top of that, revenue failed to meet projections. And that was the first time the company had had a shortfall like that since going public, falling more than expected. That's how revenue turned out. And the company cited the effects of the coronavirus. I mean, think about it. Tactile Systems sells devices that have nothing to do with treating COVID-19. So, as medical offices and hospitals and all kinds of facilities focused on dealing with the effects of the disease, other ailments sort of went by the wayside, and as a result of that, Tactile Systems got hurt to the point where April and May sales were down 32% combined, and they dropped again in June, though not quite as much. So put it all together, and Tactile Systems shares had their biggest daily drop ever in response to these results. They were down almost 18% on the day.
Now down 47% for the year overall. All right, Dave Wilson, thank you so much. Let's get back to World and National News headlines. Back on over to Ed Baxter in San Francisco. Hi, Ed.
Hi, Carol. Yeah, I want to follow up with Dave on the weather. Still very heavy parts for the eastern seaboard, as you guys know there in the Tri-City. D.C. also being hit. New York heavy rains have caused massive blackouts. At one point, more than 1 million customers without power. It keeps coming back, and some people have it go back off again. Meteorologist Pedram Javaheri says in the Tri-City area, the heaviest rains will be about dinner time.
And then finally into the overnight hours, this time essentially tomorrow into Wednesday morning, the storm system is going to essentially fizzle out.
Yeah, the system has spread the whole length of the East Coast. Doesn't seem to be much progress at all in the coronavirus relief.
What we've suggested is a short-term fix, as others have indicated. They've objected to that. A better outcome would be to get to a total solution sooner rather than later.
Senate Majority Leader Mitch McConnell reading between the lines there, not a lot done. And it is frustrating, very frustrating for Mitt Romney, Senator.
I'd like to see that deal get done as soon as it possibly can be done, and those people that are doing the negotiating need to be working around the clock to get it done.
Meanwhile, the White House back beating the drum to opening up. Spokeswoman Kayleigh McEnany.
Overdoses do go up. Suicides do go up. Cancer cases are missed, as Dr. Scott Atlas has pointed out, that in the U.S. alone, there are 150,000 new cancer cases that arise every month among patients. Most have not been seen.
But Dr. Jay Varkey at Emory University.
Using the president's own data, the U.S. is performing worse than Chile, India, Argentina, Russia, South Africa, and Bangladesh.
She says fourth worst in the world. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. Well, even if we're in our studio,
yes,
come November, December, Carol Massar, you know who's not coming to visit us?
I am devastated. The Radio City Rockettes.
I know. Such a bummer.
Well,
what a great tradition.
It is a great tradition. If you check my Twitter feed, I've often taken pictures with them when they come to our studio.
I'm very familiar. I have learned how to pose for a picture from them.
I have to say, they're
hand on the hip.
You did learn. Little leg bend.
Yeah, little leg bend. Just figure out your best side, all of it.
These
They're very good at
women
that. They're
are
also incredible athletes. And,
God.
when they talk to us about
rock solid.
What the preparation is, the tryouts, I mean, it's unbelievable. Sort of the poise and the athleticism is something to behold.
And usually once they're in for many, many years that they do this. So, as you said, they start getting ready for it pretty early. But the news came out. Dow Jones, we've got a little right through from them. And so they announced that they've canceled this year's Christmas Spectacular starring the Rockettes. And it's all about COVID-19. And they're going to refund tickets if you bought them. And it's just a reminder, Jason. And I feel like it's interesting. Our conversation, I know you were out getting the generator going earlier, but Emily Oster over at Brown, we're at a moment where in order to reopen the economy, we have to think about the things that we have to get back to normal versus those we don't. So it's like bars versus schools. Okay, schools we need to reopen, right? So what can we do? And if we keep bars and sporting events and entertainment closed, does that increase our chances of being able to start opening up at least some parts of our economy?
And I think the answer is yes.
Yeah,
I mean, I think the answer is more and more a resounding yes, especially when it comes to gathering large groups of people inside, which is the very definition of the Radio City Rockettes Christmas Spectacular.
It's a lot of people.
All those people and reindeer, live reindeer. I mean, don't discount that.
It's like my favorite part, the live nativity scene. I really love it.
I know.
All right, you're listening to Bloomberg Business Week. Carol Massar and Jason Kelly, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with more on the Walt Disney Company. We gave you the numbers. Shares up now by 2.5% after an initial move lower. A turnaround for Disney, again up by 2.5%. Here are some of the key numbers you need to know. Third quarter adjusted EPS, 8 cents. Estimates were for a loss of 63 cents a share. Disney Plus subscribers, 57.5 million. Estimates there were for 59.4 million. So again, we are seeing Disney shares advance after hours. Also out with earnings moments ago, we did hear from Fox Corporation. Fourth quarter revenue, 2.42 billion. Estimates there, 2.39 billion. Adjusted EPS, 62 cents. Estimates there were for 58 cents. Another record for NASDAQ today, a move higher for the Dow, the S&P. Equities eking out a gain as investors tried to gauge the outlook for a stimulus bill to blunt the economic impact of the coronavirus pandemic. Right now, we had the S&P 500 index advancing today. S&P up again, advancing by 11 points, up by about 0.4%. The Dow up 164, up 0.6. NASDAQ higher by 38 for the NASDAQ Composite Index. That was a gain of just about 0.4%. Again, that was a record for NASDAQ. Beyond Meat's second quarter net revenue, 113.3 million. Estimates there were for 99 million. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, if I had to categorize our favorite people to talk to, Carol, on this program, it's the deans of business schools. Part of it is we have an affinity for business schools owing to the fact that Bloomberg Business Week does a nice ranking of them every year, but also we're fascinated by their strategic thinking and also their training of the next generation of leaders. So let's bring in one right now. We're talking about Bill Boulding. He is the dean of Duke University's Fuqua School of Business, proud alma mater, I should point out, of Paul Sweeney, our colleague Paul Sweeney from Bloomberg Intelligence and Bloomberg Radio. Bill, really nice to have you with us.
It's great to join you, although I'd much prefer to be there in person as I've been in the past.
I know. Listen, we're not even together. So, I mean, as our listeners unfortunately witnessed earlier, I'm in Westchester where the power went out. I was scrambling around to get my generator ready while Carol gamely went on. So we're all making our way here. I will say the sun is coming out, and you've had to deal with the same storm we had. Speaking of storms, speaking of disruption, obviously the pandemic has laid bare so many things in the world of education. Give us an update as to where you are in terms of getting your students back come fall.
Yes, so it's been unbelievably challenging to navigate this pandemic. We are reopening in the next few weeks. Our plan is to bring our students into our buildings, and that our classrooms will be a combination of face-to-face instruction, some people in the room, other people participating virtually. And so we have the ability to allow the simultaneous kind of physical and digital participation. And we're telling both our faculty and students that no one has to be physically in the building, because we want to make sure that our number one priority is making people feel as safe as possible. In order to do that, there are a bunch of things that have to be put into place in order to ensure the safety of our community, though.
Such as?
So the first thing is that with all the kind of the moving advances around testing, we're going to require that all of our students be tested before and receive a negative test before they're allowed into our building. Once they've passed the first hurdle around the initial test, there'll be follow-up testing through the term for the students, the faculty, and the staff that are engaging with one another. There is a monitoring process where every person who comes into our building every day has to fill out a health app and make sure that they're not experiencing any symptoms. Once they're in the building, we're going to be following strict rules around social distancing. And so a classroom that would normally comfortably hold 75 people with physical distancing requirements of 6 feet or more, that number goes down to 22. And so we're doing creative things like using bigger spaces like our library, like a ballroom space where normally you might have, say, 300 people in that space, you could fit 75 people. We're also adding tents to the campus so that people can safely interact with one another outside. And we're making everybody sign a compact because a lot of the concerns that people have are around the behaviors. Are they going to follow the basic protocols that are needed? And we will be requiring masks both for faculty and students the minute that they step onto campus, and that will continue while they're in the classroom together. So it's going to look and feel very different, but we will be bringing people back into our building.
It sounds like you are essentially creating a bubble community.
I think about it that way quite a bit. We're not quite at the level of the NBA where they truly have created a bubble. We can't do that because we're not at Disney World.
Yeah.
And so our students go home in the evening and we lose the control over the bubble. But that's essentially what we're trying to do is we're trying to control as much as we can about the environment so that we can give people the comfort level in this environment where, as you well know, people are just scared. They're anxious given the health crisis, and then there are kind of two other layers of this crisis in terms of your economic well-being and a crisis of values. And is our society going to live up to the social contract around fairness and justice? So there's an enormous amount of stress as we work with people, bring them back into our programs. We want to make sure that we take out of the equation the stress around health issues.
We're talking with Bill Boulding. He is the Dean of Duke University's Fuqua School of Business, joining us on the phone from Durham. We're going to continue that conversation with the Dean in just a few minutes on the other side of some news. Definitely want to talk to him about something he touched on right there at the end of that answer, Carol, which is the values and how it's changing what he's teaching. He has taught leadership for a number of years, and I know that this is top of mind. You know, we've got a Bloomberg Live event later this week about race and equality on Wall Street, and that cuts across all of corporate America. This is top of mind. We know that for business school students, and certainly is going to be something they face as they get out into the working world.
Yeah, and he's looked a lot about, healthcare specifically, patient care, the quality of delivered care. So really a great voice to talk to when it comes to education, when it comes to the virus, kind of all of this meeting together. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Dean Bill Bolding down at the Fuqua School of Business, Duke University. Well-known, well-regarded, so much more to talk to him about, Karen.
Yeah, totally. It's one of our favorite subjects, and we've got a deep dive really on education on this Tuesday. So looking forward to continuing that conversation. Let's get back, though, to your top business story. A lot of earnings, Charlie Pellet, after the close.
And not just earnings, Carol Master. Before we get to the earnings, obviously we heard from Disney, Fox, and Beyond Meat. Got to begin with Novavax. This stock is now down 25% after early COVID-19 vaccine data disappointed. Just getting the headline now on the Bloomberg, but that stock after hours trading lower by about 25%. Earnings front and center. Disney's 10-month-old video streaming service, Disney Plus, grew to 57.5 million subscribers in the last quarter, missing the 58.4 million average of analyst predictions compiled by Bloomberg. Disney shares, though, after hours, they are advancing by just about 1.5%. Fox also out after the close of trading. Fox reported revenue for the fiscal fourth quarter that was higher than analysts' average estimate due to an increase in affiliate fee revenues driven by the TV segment. Also, Beyond Meat shares are lower, down now by roughly 4%. Sales surpassed the highest analyst estimate in the second quarter. Consumers eating at home snapped up the company's substitute burgers and sausages from grocery aisles, countering a decline in sales at restaurants. So lots going on after hours. Great reason to keep it locked into Bloomberg Radio for the very latest. Markets, we had a record for NASDAQ today, also a record for gold. NASDAQ up 38 points, higher by 0.4%. S&P up 11, choppy session up 0.4%. The Dow up 164, up by 0.6%. 10-year up 15.30 seconds. The yield on the 10-year 0.50%. Gold, as I mentioned, a record now at 2,016.80, up today by 2%. West Texas Intermediate crude up 1.3%, 41.55 for a barrel of West Texas Intermediate crude. Lots of investors are awaiting Friday's jobs report. Francis Donald is chief global economist at Manulife.
And what I suspect we're going to see is that more people are unemployed on a permanent basis as opposed to temporary, and the duration of unemployment is going to start looking much worse and worse.
We get our first glimpse of employment when we get the ADP private payrolls report. Thursday morning, of course, jobless claims. Friday morning, the big event, the Labor Department's employment report. Got to keep it locked into Bloomberg for the latest on all these data points. Recapping, NASDAQ at a record today, up another 0.4%. S&P eking out a gain of 0.4. The Dow up by 0.6. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. We do want to get back to our conversation with Bill Bolding. He's the Dean and J.B. Fuqua Professor of Business Administration at the Fuqua School of Business at Duke University, and he is still with us on the phone from Raleigh, North Carolina. And we've been talking about reopening. You know, I feel like, Bill, this is such a charged year because of the virus, but also because of what happened in Minneapolis. And I just do wonder, you know, I always feel like we turn to academia to kind of help our way through this. I'm curious how that's, you know, affecting you folks at your institution and maybe some of the teachings that might happen come fall.
Yes. So before kind of the end of our conversation was you made the comment that we're trying to create a bubble here. When it comes to events happening in the world, we absolutely don't want a bubble. We don't want to isolate our students from the realities of these incredibly difficult circumstances that we're facing. So we want the outside world to permeate the experience and make sure that everyone in our community understands our responsibility to step up and to provide some guidance, some leadership in this environment. I think that this crisis has laid bare, in some sense, the need for what I call triple threat leadership capability. With the things that are happening around the pandemic, you have people who are incredibly scared, justifiably so, incredibly anxious, and so we need the kind of leadership capability that can bring people through this crisis, get them to the other side of the crisis, and make them feel like they've actually advanced in some way. So what is that triple threat capability? The first thing is that people need to have the IQ to understand and make sense of the environment. Second thing is they need to have the EQ, or the emotional intelligence, so that you understand the anxiety that people are facing, the stress, and can feel what they feel. And the third thing is something called DQ, or a decency quotient, which is to actually care about other people and to give them a sense of belonging at a moment in time when they're simply so afraid, and also the integrity to be honest and transparent with people about the very real challenges that we're facing, not to sweep these challenges under the rug. But then ultimately I come back full circle to, you need to, in these bad times, you also have to have a plan. Right. You have to have the ability to think through what's going on, to come up with a plan, because ultimately people want to know, are they going to be okay? And so we feel like we have a responsibility for all of our students to absolutely address issues of racial equity and justice, absolutely address issues around health disparities, economic disparities. All of that will be a part of the conversation, a part of the curriculum that our students experience.
And so, Bill, does that mean changing curricula? Does it mean hiring different professors? Does it mean different courses altogether?
So it's probably all of the above in terms of how we respond. So in some ways we can adjust the content around courses that already exist. And an example here is a course that we're launching around how do you create common purpose in a world of differences. And these issues around racial justice become very much a part of that conversation in that course. At the same time, we will probably introduce new course content and review all of our materials to make sure that we are addressing these issues wherever we can. And to give you an example of that, oftentimes people think, well, those conversations should probably happen in your management and leadership classes. And yes, they should. We need to understand how we connect to people, how we work with one another, how we bring out our best. But it's also the case that if we're going to help our community understand root causes of injustice, that we have to start identifying some of the systemic sources of discrimination. So, for example, we have a faculty
Bill, unfortunately, I'm going to have to stop you there. I really want to hear the answer to this, but we're going to run up against time. You're going to have to come back and join us, especially as school gets back underway, because all these issues that you're describing are the most important issues. This is what we're talking about all the time. Really appreciate the time.
We could spend an hour with
We absolutely
and
could.
we will have to
We're
get
going to have
back.
to make a road trip down to Durham.
Yes.
Bill Boulding, Dean of the Fuqua School of Business, joining us from Durham. Go Bulls.
All right, let's get back to world and national news headlines. Back over to Ed Baxter.
All right, Carol, thank you. Coronavirus relief bill loggerheads. White House spokeswoman Kayleigh McEnany says the president has narrowed his focus now.
Their $3 trillion plan, they've now said, oh, it needs to be $3.4 trillion, when the president has had a very narrow, specific focus right now. It's extending unemployment insurance. It's making sure Americans don't get evicted.
And Senate Majority Leader Mitch McConnell doesn't even seem to be involved at all at this point.
I think they have said that there's not a whole lot of movement yet, but a feeling that it seems to have been expressed that we'd like to get an outcome.
Which is nice, but Democratic Senator Joe Manchin says this is a shame.
It really is a shame. And the leader, Mitch McConnell, is the leader of the majority party in control of the Senate, which is Republicans. He hasn't even called us together at all for the last 2 or 3 months since the first COVID package went out, knowing that we would run into this wall that we have.
So the question is, senators haven't seen anything? Getting more on the massive explosion at Lebanon's main port at Ras Beirut, overwhelming hospitals with thousands injured and dozens killed. Authorities are now saying it was caused by highly explosive materials at the port, but still, as of yet, not saying whether it was an incident or an accident or an attack. The footprint of ISIS along the eastern seaboard is huge.
The tropical storm warnings extend not just across the Carolinas, but even as far north as the state of Maine. An incredible area of coverage here when it comes to the expansive nature of this particular fast-moving system now.
And I'm sorry, my desk assistant's here in the background. Meteorologist Pedram Javaheri there. In San Francisco, I'm Ed Baxter. This is Bloomberg.
Ed Baxter, thank you so much. I work from the same temp agency that Ed does in terms of his desk help.
They send some mouthy temps to you guys places. Very
they like to do tricks. They
very
want
opinionated. But then sometimes they just fall asleep for hours at a time.
Totally. Or throw a dog toy at you.
Yeah, exactly. Whatever it is.
A toy.
Whatever it is. You never
All right.
know.
So listen, we're going to talk about
They just called them toys.
Exactly. They just call them toys. Okay. We're going to talk about Disney in just a moment because we did get their earnings and there's a lot to go through. And the stock is definitely, it sold off and then it rallied in the after hours. A story that caught our attention, courtesy of Dow Jones Wall Street Journal, is about a former Walt Disney executive who is creating what he calls the Disneyland of football, Jason. It's a resort. It's centered around the Pro Football Hall of Fame in Canton, Ohio. It is slated.
You've been there many times, I know.
All
the pilgrimage.
I grew up watching football, so be careful. It is slated to include a football-themed water park, hotels, retail space, a research building, and ultimately apartments.
I love when you get defensive about sports. It's one of my favorite things.
I love when you pick on the girl that she doesn't know sports.
You're like, watch it, buddy. No, I'm not picking on a girl. I'm picking on you. It's not about you being a girl.
Oh, okay.
I'm just picking on a Carol.
Yeah, exactly. That's exactly. It's like being around my family.
You happen to be a girl.
I do.
In any case, this is interesting. I mean, listen, if you think about what's going on around arenas and other sports attractions, last week on the Bloomberg Business of Sports, quick plug, we had the developer of the new arena out in Belmont for the Islanders' new home there at Belmont Park. I mean, it's a massive retail commercial residential complex.
The Left model. It's the Left model. Like live, work, shop all in one place.
And even if you think about it, we talked about this with this gentleman, Tim Lywicki, you think back to what they did at Staples Center in downtown Los Angeles. I mean, these are the things that happen. This is what people, want to do these days. Sports and so much more.
Well, it's in its second phase. It's a $300 million second phase they hope to break ground on later this year. So it's going to be massive.